All right, welcome into Market Day Report. It's Friday the 13th. How about that? I'm Scott Shellady, otherwise known as the Cow Guy. Thanks for tuning us in here. This is the halfway point. I'm here to take it home. I can see the barn, so the horse is getting a little bit faster. Let's take a look and see what we've got going on in these markets. I tell you, I saw those numbers as they came out yesterday. If you remember, I announced them on air. I didn't see a 40-cent rally in beans yesterday. We'll see about what we've got going on here today. December corn, though, let's start there. 3.5 cents lower to 4.92.5. We try to get through 5 yet. Look at that. 4.98 3/4 is the high. We've had an 8-cent range. We're about 2 cents off the low of an 8-cent range. 3.5 cents lower right now, just trying to find our feet. It wasn't a massively bullish number yesterday in corn, but you know what? Everything kind of got drug up by that bean market. All right, let's take a look at beans today. They're giving back a little real estate. 11.5 cents lower to 12.78.5. That's Nove. 5 cents from the lows, 20 cents from the highs. All right, so we've already had a 25-cent range. And that's going to give you a pretty good picture about what's been going on. 11.25 cents lower though in the Nove. The 12.78 3/4 as we back up. I think, actually, I'm pretty certain that yesterday's high in Nove beans was 12.99 3/4. We just couldn't do it. We put a 13 out in Jan, but we couldn't do it in Nove. All right, I got to stop talking. Let's move on to wheat and see what's going on in wheat in Chicago. There we go. We got a 9-cent higher board there. Deese wheat in Chicago is up to 5.80.5. That's 6 cents off the highs, 11 cents off the lows. There you go. That's a 9-cent gain. We've got a 5 3/4 gain in the March right behind it. 607.25 is the price in March. From Chicago, let's go to Kansas City and see what's going on in the old hard red. And we are steady, a little bit better. We're 3 ticks higher, 3/4 of a penny. 675 3/4 is last there. That's about almost 4 cents off the lows. So there you go. And we're about 13 cents from the highs. So that'll give you an idea about where we sit in that range. Steady, a little bit better as the call in hard red wheat, Kansas City. Let's go to Minneapolis and see what's going on up there. We've got a 2 1/4 cent gain in the spring wheat there, and that's the 7.25 3/4 is the price. 1 3/4 cents higher in the March right behind it to 7.49. How about cotton? Let's see. Now we've finally got a little bit of a gain here. Deese is up 113 points to 86.05, and that's going to be 29 points off of the high of the day. We like reporting stuff like that. But my next guest analyst has got some things to say, I'm sure, about it. It's Peter Haralambakis. There you go. I got it right. The first time is a charm on the way in, but on the way out, I have a problem. I don't know why. Anyway, Peter, thank you very much for taking the time here on a Saturday. Okay, I'll kick it off and I'll let you have it. I didn't see a 40-cent rally in those numbers yesterday, but I guess the rest of the market did. What do you say?
Well, again, obviously the market didn't see it either, right? So with a pullback of 12 cents there. But real quick, just like export highlights that came out today, net sales of in the corn, net sales of 910,000 metric tons for the 2023-2024, which were down 50% from the previous week and 9% from the prior 4-week average. Soybean net sales of 1.1 million metric tons for 2023-2024. We're up 31% from the previous week and 68% from the prior 4-week average. Wheat net sales of 652,000 metric tons for the 2023-2024, a marketing year high. Were noticeably from the previous week and up 67% increase from the prior 4-week average. But again, like you're saying, the main driver was soybeans yesterday. Was it 40-cent rally warranted? To be determined, right? So the soybean complex moved sharply higher yesterday in reaction to the USDA's downward revision in the U.S. Soybean crop estimate, with yields dropping from 50.1 bushels per acre to 49.6 bushels per acre, which slotted at the lower end of the range. I guess everybody got spooked with that. Soybean production came in lower as well at 4.1 billion bushels, down from 4.12 billion bushels, while corn and wheat followed along, despite yesterday's revisions being less fundamentally constructive, right? So USDA did lower the U.S. corn crop last month from to 15.064 billion bushels, down from 15.134 billion bushels, while also lowering the yield for corn from 173.8 bushels per acre to 173 bushels per acre as well. But the overall structure of the balance sheet kept further gains in check on the corn, at least, while wheat saw a fairly solid increase in estimated U.S. ending stocks from 615 million to 670 million bushels. Again, the soybean numbers were and are at the forefront of the grain complex, with the rally from their recent lows to the tune of 24 cents as of right now. So as we tested resistance levels of that $13, like we said, or like you mentioned, just under it, $12.95 and current level of $12.79, some exponential moving averages there. Beans in the teens rhetoric will have to wait for now, as we just witnessed another death cross technically on the November contract, where the 50-day exponential moved average crossed under the 100-day exponential moving average. So again, we were talking before we came on, the flow itself with positioning. There was some short covering, probably was a part of that 40-cent rally as well, but we're seeing some kind of repositioning with down 12 right now in the soy. So
Okay.
that's pretty much.
That's a lot. There's a lot to take in. Great information, super content. Appreciate it very much, Peter. Have a great weekend. Peter Haralambakis coming to us from Inver Grove Heights and CHS up in Minnesota. We're going to go away. We're going to pay some bills. We're going to come back and talk livestock with me after a bit. We'll be right back.